Hello and welcome to Pro Trader Strategies Market Commentary for Friday, March the 4th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Happy Unenjoyment Day, as we used to call it on the floor. Friday unemployment. First Friday of the month, we get non-farm payrolls, which is the overall look as to the job creation or the job contraction market. This one came out with non-farm payrolls, 242,000 jobs created versus 195,000 jobs created was expected, so much better than expected on that front. The unemployment rate came in right at 4.9%, so overall pretty good numbers on that front, although the average hourly earnings was down 0.1% and was expected to rise at 0.2%. So that's not a very good sign for wage inflation. Wage inflation we want to see because then people start buying, creates more inflation in the overall economy because people have more disposable income. When you have a contraction in that, they don't have as much to spend, and they might not be getting the wages that they were looking for. So just keep that in mind going forward. On to the markets. As you can see here, /CL crude oil futures are pushing above $35 a barrel. That's the line in the sand I was talking about. The bulls wanted to get above. We've tested that several times, but now it looks like we could settle above that. So later on today, I'm going to try and decide how I'm going to play this. There's just so much crude out there that basically these barges, or these tankers I should say, are taking on longer routes to get to their destination. The reason why is because they don't want them just sitting out there in the ocean just bobbing around holding oil. There is a glut of oil out there, and they're having trouble finding places to store this because so many people have stockpiled this at these low prices. That is a major issue. So, the whole economic versus technical analysis on this, I technically speaking think this could pop up, but with this glut of oil, it's driving me crazy as to the fact that it should be possibly going down. There's just a plethora of oil out there. So I might do something like just buy some calls in there, some cheap calls in there, like the 38 calls or the 40 calls, and that way I'm not risking a whole lot to the downside. I don't think I want to sell some puts just to collect premium in there because I could easily see this go down. So that is the back and forth that I'm going through right now. So I'll have to I'll tweet that out what I'm going to do later on today. On to what I've done, and that let's go on to a couple of what the markets are doing. Right now, as you can see, we've really consolidated here and starting to look like it's going to flag out, which means it could either go a spike higher to this point of control right around the 44.22 area, or just come back off and test this value area low, which is right there at the 41.66 area. So that's for the NASDAQ /NQ. And onto the, I don't have the E-mini S&Ps here. Oh, it's over here. Let's pull this over. E-mini S&Ps, as you can see, we are just near the highs of the day. If this settles below here, which it looks like it might be, that could be an intraday short down to the intraday point of control. So that would be a place to sell these, cover maybe half of them here at the point of control, and look for it to come down and test the value area low of the day. So that is just a day trade for all intents and purposes. As you can see here, E-mini S&Ps /ES up about 8 points on the day. All right, on to a couple of trades that I've done. Now with this SPY, SPY, I've done a couple of things in here. In the March, I did a 201, 203, 208 call broken wing butterfly. Now, broken wing butterflies just means that it is not really even on both sides. As you can tell, I'm short the, I'm long the 201 calls, short 203 calls. And what I did there was I financed the 201 calls by selling 2 of those 203 calls. So it was right around $2 to buy those 201 calls, collected about just over $1 for each of those 203 calls. So I had a bit of a credit there to spend on buying my defined risk part of that at the 208 calls. So I have a defined risk strategy. There is more risk to the upside on this. You know, I'd obviously in the next 14 days like to see it go and pin at 203. I just needed to add some long deltas because I'm overall short. Believe it or not, I would love to see this go down and, expire worthless for the most part and go below the 201s, and because I collected about a 4-cent credit for that. So, but I did need to manage some of my risk to the upside on that. That's why I ended up going with that broken wing call butterfly in the SPY. Another thing that I had on was I had on the March, and I'm short the 197 calls. Yes, I'm deep in the money on those and trying to keep that dream alive. I still see us coming back and retracing. Some of this move to the upside, I think, is just a little overdone at this point. So I rolled those March calls out into the April and collected another 49 cents for that. So I rolled the March to the April for 49-cent credit, lowering my cost basis on that, increasing my ability to break even on that if we get a bit of a pullback on those calls or in the SPY. On to the gold trade. This gold trade I took off yesterday, maybe a day early, but we were rallying up and testing this high area. Thought it could end up being tweezer tops. Today's starting to really look like a pretty bearish signal up there at the top, but I did the April originally, 109, 112 put spread, and originally I had collected 32 cents for that. So I was short the 12 puts and long the 109 puts, and that market obviously rallied. I originally put that trade on for 72 cents. So I originally sold it for 72 cents, bought it back for 32 cents on that trade yesterday, and you might be able to cover that a little bit better today, obviously, because we're a little bit higher on that one. On to XOM. XOM is another trade that I'm looking to take off. Haven't gotten out of it yet, but I'm looking to take this off. We've put this on for the Iron Condor segment webinar, and I have on the 72 and a half, 75, 90, 92 and a half Iron Condor, and I'm looking to try and get out of that for about 50% of my max profit on that. So it's probably going to be, I'm probably about 10 cents, 5 to 10 cents away right now, 7 cents away. So we'll have to see if I can get that off today. But that's another one of those that has come into line. This is exactly what we want to see. Last couple of weeks, we've just gotten vol contraction, sideways market for ExxonMobil, ticker symbol XOM. So that is right within our wheelhouse of being able to cover that one if we can get it continue to sideways and get some of that theta contraction. Might have to be on Monday before I get to cover that one. Today's webinar is going to be talking about how to defend these iron condors when they go against us. Like if that would have traded up into the near 91 on this XOM on the upper side, or 75 on the downside, which would have been 74.30-ish would have been our break even on the downside, so down here. So if that market would have gone down there, then that's when we are going to look to defend something like this, like I did in ADM. So I'm going to go over this ADM trade in depth today, this afternoon, for the webinar on how to defend the broken wing butterfly, or how to defend the iron condor and the iron butterfly. We haven't had any of these iron butterflies test us really on the rules that I follow, so we'll have to see at the end of the day if any of those come into fruition, but we're going to be talking about how to defend those this afternoon. Go to protraderstrategies.com and sign up for that webinar, and if you haven't seen the one on the iron condors or the iron butterflies, please sign up and get those, because I go into the rules and then I'm going to talk about how to defend those today. All right, that's all I got for you today. If you can't take that, take it easy.